Hello and welcome to the day ahead. It's Wednesday, March the 4th. I'm Andrew Gagan. Well, the local market is set to fall heavily at the opening, with ASX futures down 1.3%. Israeli and US forces have continued to strike targets across Iran, while Iran has launched retaliatory strikes on Gulf states. Equity markets have plunged and energy prices have soared, prompting concerns about inflation. Wall Street's main indices tumbled at the opening before recovering, but the S&P 500 has still hit its lowest level in more than 2 months, with the market worried that the US is being pulled deeper into the conflict than investors had expected. The small cap Russell 2000 index also sliding, while Wall Street's fear gauge, the SIBO volatility index, spiked to a fresh 3-month high. Tech stocks fell, led by losses in Nvidia. Airline and travel stocks were sold off for a second day, with flight chaos continuing around the Middle East. And US-listed shares of gold miners fell heavily as the bullion price buckled under the weight of a strengthening US dollar. Another concern for investors are the cracks emerging in the private credit market after Blackstone's flagship credit fund, BCRED, saw a surge in redemption requests, which dragged other listed fund managers lower. Retailer Target surged after its new chief executive pledged to return to sales growth and issued an upbeat profit outlook. And Paramount Skydance fell heavily after Fitch downgraded the company's rating to junk following its recent proposed acquisition of Warner Brothers Discovery. The Pan-European Stock 600 index lost more than 3%, and the banking index is at a near 3-month low, with UK lenders seen as more exposed to Middle East risk, taking the hardest hits, among them HSBC. Well, 4 days into the war in the Gulf, President Trump has said that the US military had struck numerous Iranian naval and air targets, saying that just about everything has been knocked out. This as the conflict spread to Lebanon, with Israel targeting Hezbollah. Iran has fired missiles and drones at neighbouring Arab states that host US bases and strangled shipping through the Strait of Hormuz, where a fifth of the world's supplies of oil and liquefied natural gas transit. Well, investors are dumping bonds globally on fears that US-Israeli war on Iran will stoke inflation. Fed member John Williams has said that so far the impact of the Middle East war on markets was relatively muted, but in particular he's concerned about rising energy prices, saying the important question is quantitatively how big of an effect does that have on the US and how persistent those effects are in terms of price stability. And fellow Fed member Neil Kashkari has said now with the geopolitical events we need to get a lot more data in. Right now it's just too soon to know what imprint this has on inflation and for how long. Well, US Treasuries have slumped for a second day as surging oil prices prompt traders to dramatically reassess the prospects of more interest rate cuts. US 2-year yield rising to 3.51%, the 10-year at 4.06. Australian 3-year government bond yields rose to 4.36%, the 10-year was 4.79%. The US dollar index is up almost 1% on the day. The Aussie has slipped to 70.4 US cents. Well, President Trump has said if necessary, the US Navy will begin escorting tankers through the Strait of Hormuz. And Qatar, which is among the world's biggest liquefied natural gas exporters, has halted its LNG production. Oil prices have surged further as the Middle East conflict intensifies, disrupting global energy shipments. Brent is up 12% since the conflict began on Saturday at $85 a barrel. Gold has been weighed by a stronger US dollar and dimming prospects for rate cuts on rising inflation concerns. Spot gold down around 4% at $5,100 an ounce. Copper's down more than 2%. Iron ore up slightly, $103 US dollars a tonne. And Bitcoin is back to around 68,000 US dollars. Locally today, we get fourth quarter GDP figures, and Endeavour is due to report its earnings results. That is your day ahead. See you again tomorrow.